If you woke up tomorrow with £1 billion, where would you put it? Most people say the same things. A bank, stocks, maybe some property. And that's exactly why most people would get it wrong. Because the ultra wealthy don't think in terms of investments. They think in terms of parking money. Different piles, different jobs, different rules. Some money needs to move fast. Some money needs to be untouchable. And some money exists purely for when the world stops behaving normally. Today, I want to walk you through where billionaires actually park their money, and why land plays a much bigger role than most people realise. 1. Liquidity. Money that can move instantly. The first place billionaires park money is where it can move fast. Liquidity. You can be worth £1 billion on paper and still be powerless if all your wealth is locked up in buildings, private companies or long-term assets. Imagine needing £200 million tomorrow to buy a business, stabilise an investment, or take advantage of a crisis. You can't sell half a skyscraper overnight. That's why the wealthy always keep a large pool of highly liquid capital, not to maximise returns, but to stay flexible. This money isn't chasing growth. Its job is simple: stay safe, earn something, be available immediately. Here's the important bit. Billionaires do not park this money in bank savings accounts. Banks are convenience tools, not wealth tools. Instead, they use short-term government bonds, money market funds. Government bonds are effectively lending money to the state. Short durations, predictable returns, extremely low risk. Money market funds do the same thing but at scale, pooling cash and managing it professionally while remaining accessible almost daily. The difference this makes is enormous. On £1 billion, earning fractions of a percent versus several percent isn't a rounding error, it's tens of millions per year. Liquidity isn't about getting rich, it's about being ready. 2. The permanent vault, wealth that is never meant to be spent. The second place billionaires park money is somewhere most people never see: the permanent vault. This is wealth that isn't there for lifestyle spending, opportunity, or emergencies. It's there to survive generations. This money is structured so it can't be seized easily, can't be mismanaged by heirs, can't be destroyed by one bad decision. This is where family offices, trusts, foundations, and holding companies come in. These structures separate control from ownership. The wealth doesn't belong to a person anymore, it belongs to a rule book. That rule book decides when money can be used, who benefits, how much can be accessed, what happens after death. This is how fortunes outlive founders. What goes into this vault? Mostly boring, durable assets. Prime real estate held long-term large equity stakes in businesses. Private companies with predictable cash flow art. And collectibles as portable stores of value endowments that invest and distribute slowly. This isn't about returns this year. It's about never starting from zero again. Think of it as freezing wealth in a form that can't melt easily. 3. The bunker. Assets for when systems break. The third parking spot is the one most people don't think about until it's too late. The bunker. This is money parked not for growth, but for survival. Every billionaire understands something simple. Markets fail, currencies weaken, governments change rules. Paper wealth depends on trust in systems, so the rich always hold assets that don't. That's where land comes in: farmland, timberland, water rights, mineral rights. Assets that exist physically, produce real outputs, can't be printed, don't disappear if a currency weakens, land feeds people, trees grow regardless of markets, water and resources don't become obsolete. That's why farmland ownership among billionaires has surged. It's not exciting, it's not trendy, it's resilient. If food prices rise, farmland becomes more valuable. If inflation spikes, land adjusts with it. If markets wobble, land still exists. Land is the financial equivalent of owning the board in Monopoly while everyone else holds cash. The real lesson: billionaires don't park money where it looks best today. They park it where it can move quickly, can't be destroyed. Still matters if systems change liquidity for opportunity, vaults for permanence, land for resilience. That doesn't mean you need farmland or trust tomorrow. But it does mean the way the wealthy think about money is very different from how most people are taught. Wealth isn't just about returns, it's about positioning. And if you're building your own financial life, that mindset matters far more than chasing the next hot investment. That's it for today. Build the budget, then build the resilience.